Good afternoon, everyone. I'll wait for 1-2 minutes more and then we'll start. Good afternoon, everyone. Thank you for joining this webinar. This is a new series which we are starting. It will be called Spotlight ETFs of the Month. So we'll be doing this webinar every month, preferably around 10th to 15th of uh, of any particular month, and we'll be talking about ETFs, or rather, if I talk more broadly, theme, sector, or market cap segment, which we find very interesting given the current market conditions, and which will certainly sorts of should be considered for investments given the current market scenario. In this sorts of presentation, we'll be talking about typically two or three products. And this month, I'll be talking about uh, two products. One is Mirae Asset Nifty New Age Consumption ETF, and this ETF also has a fund of fund option on it. And then the second product which I'll be talking about, Mirae Asset Nifty 100 Low Vol 30 ETF. So one theme which is being talked about a lot, consumption, which is especially post the budget, and then the low vol 30 ETF, which I think needs a lot of attention given people are very interested in factor based products, strategy based products. And right now, momentum is not doing so well. And that was always a concern since last year when market ran up in a single direction in a very sorts of quick manner, and some correction, some volatility was always on the horizon, and that is what we are seeing in last couple of months. And we'll talk about how low vol makes a lot of sense, especially for investors who already have exposure to alpha or momentum, or investors who are sorts of looking to take exposure in market but probably in a more sturdy product. So what I'll do is I'll just first talk about the budget itself, right? And I'll talk more so on the consumption side, because one of the product which we are going to talk about is consumption. And in low volatility also, one of the reason why we have chosen low volatility product is that first, it captures stocks which are less volatile. I think that is what people prefer right now. And second, it has significant exposure to consumption and healthcare, which are defensive segments, and out of which consumption we really prefer right now. So if we look at the budget, and from a consumption point of view, the news was regarding the tax relief which Nirmala Sitharaman provided to people who were in the new tax regime with income range up to 12 lakh. Right. Just to give you some data points right now, if you look at assessment year 2024, 8.6 crore people have filed for tax for assessment, right? And out of which 85% of people are up to 12 lakh of income. This is pay the impact, right? And the second data set which is floating right now is that around 75% of people are in new tax regime. And if we, I think if we can safely project that by the end of next financial year, somewhere around 80% of people who are filing for tax will be under new tax regime. So so the number of people who are getting impacted, positively impacted by these tax cuts is significant, right? So out of 8.6 crore people, 85% is up to 12 lakh, and roughly around 75-80% people are following a new tax. Are following a new tax regime. So there's going to be a positive impact on a significant number of people, and that is why this tax cut should not be sorts of considered some a very smaller exercise. It is going to be a significant booster for consumption. If we look at the data, roughly we expect that because of this tax relief, we are going to see a tax saving at at individual level of almost 1 lakh crore, right? And 1 lakh crore amount is significant because if you look at overall budget of government on rural spending, that is around 5.6 lakh crore for FY26 base estimate. So again, the announcement, and again, if you put into context and just realize how significant this tax relief of 1 lakh crore is, roughly around 1 lakh crore is, the entire listed core consumer universe, where you can look into F&Bs, personal and home care, jewelry, liquor, QSR, paint, footwear, etc. This does not include apparels, auto, and consumer durable. These core consumer companies generated revenue of almost 4.4 lakh crore in FY24. So even a smaller redirection or a partial redirection of this 1 lakh crore saving towards this segment is also going to boost or accelerate the growth significantly, or have a meaningful impact towards it, right? And we personally believe that typically this 1 lakh crore saving is going to sorts of boost consumer discretionary space more, because if you look at the data within that uh, up to 12 lakh rupee uh, uh, bracket, the most of the tax saving is going to be on the higher side, right? People within up to 12 lakh, people who are going to earn more on the higher side of towards 12 lakh bracket. And there we see that most of the saving can be directed towards discretionary more than staples. It will result in some sort of premiumization, which we have already seen in past 2-3 years, and we see this sorts of going to be a long-term structural drive towards premiumization, more discretionary spending. In this presentation, we'll also be talking about how wallet share of discretionary items have already grown significantly, and we believe that the impact of this entire tax relief is going to be more positive for discretionary than for the staples per se. So overall budget has been sorts of positive from a consumption point of view, in and we hope that it revives the flagging urban consumption, which has been obviously key concern in last 1-2 quarters. Rural, we believe that it is already sorts of recovering, and we believe that is going to continue. We believe that strength in rural consumption is going to sorts of continue reviving. Now, what I'll do is I'll very quickly new age consumption ETF as well as fund of fund, because this is the only product in the market which only targets discretionary segment, right? I just talked to you about that in budget proposal may there is a significant impact on tax saving. We expect tax saving of around 1 lakh crore, which we believe is going to be a more positive for discretionary than staple. And within the MF universe, I think we only have the product which sorts of focuses on this discretionary segment, which is the new age consumption. And in couple of slides, I'll talk about how discretionary segment is growing in India. Right. If you look at per capita income from FY18, when it was only 1,37,000 rupees, in FY23 it is more than 2 lakh rupees. Right. If you also look at private consumption expenditure, that has grown significantly in last 10 years. So consumption has been a positive story for India. And also one of the reason why consumption is so important and is such a significant theme is because of the demographics in India, right? We are talking about that in 2024 there are going to be 530 million people, which is 53 crore people who are spending roughly more than $12 per day, which is roughly around let's say 1,000 rupees per day on on consumption items, right? Which is just below China, which is roughly around 924 million. That is going to significantly rise by 2030 to 77 crores. So from 53 crores to almost 77 crores is going to be the incremental consumers who are going to spend more than 1,000 rupees a day. And what this budget do is this put more money in the hands of people, right? Again, going to talk about that 1 lakh crore a tax saving, which is going to uh, be in the hands of people. And that is something which is very important to note, because more than subsidies, more than other measures which government takes, right? There if when they are providing tax relief, the leakage is less, right? Hopefully over the course of the year you'll see more benefit coming towards the consumption segment as a whole. Even from a household evolution, you will see that in India, the lower income group is reducing, right? And the lower mid and upper mid and even higher income households are increasing, right? For example, in 2005, almost 69% uh, of households were in low income, right? Less than 3 lakh rupees income, whereas that is going to be which is going to reduce as per expectation to just 15% in 2030, right? So the proportion of lower mid and upper mid is going to rise significantly in India, and it is already rising, right? And again, this tax relief is going to give more money to these households to spend on. Again, one very interesting data which again talks about the fact that the amount of households who are categorized in middle class, lower middle class, and upper middle class is going to rise significantly in India, and that has been a trend. It's not something which we expect in future. We are seeing that trend in last 10-15 years, and we will continue to see that trend in next 5-10 years also. And one of the major reason is also we are so bullish on consumption story is the favorable demographic, right? India is already the largest country in the world from population point of view. Our median age is below 29 years, which give us that advantage of having a very youthful population from a work population, right? And that is again which gives us advantage over countries like China. And from urbanization point of view also, India has lots to do, right? India, from a urban population, India is just at 35%, which is below the world average of 56%. And we believe that this urbanization trend will also continue. But let's focus on discretionary, because that is where we believe that lot of interest is going to be in, and we believe that most of the advantage of this tax relief is going to be in, right? India right now is roughly around 2,500 dollars per capita GDP, right? And once a country crosses $2,000, it typically sees rise in discretionary consumption, right? Because whenever people start spending, the first spend is on necessities, it's on staples, etc. And when people start getting more and more money in hand, that is when people start spending on premium items, they start spending on discretionary items, they start doing aspirational buying, which is what we are seeing in India in last couple of years. Just think about tours and travels, think about restaurant, think about e-commerce, how well these segments have grown, and just look in your household or in your society, and you will realize that consumption in these segments have picked up really well, right? And again, uh, if we are having more tax saving, that is where we believe that most of the saving is going to go into, which is discretionary. Again, that wallet share of discretionary items have increased significantly. In FY 2005, 40% of spending was on food and beverages. That has reduced to almost 25% in FY by FY 25, right? You are seeing increased spending in other segments like transport and communication, other goods and services, etc. And that is what any emerging economy sees when it crosses an inflection point, which is typically per capita income. And we are seeing, again, this data illustrates that there's a rise in money being spent on healthcare, consumer services, education, entertainment, transport, etc. And the projections are also good, right? And it's in this segment is very prudent to compare ourselves with China, which typically gives you the path towards where we are heading, especially in discretionary space. In 2020, our access to internet was around 50% of population. By 25, that is expected to be around 70%. Smartphone users from 37% to around 60%. Online service users from 22% to almost 50%. I'm sure that this number will now actually be higher, and this compares with where China sorts of was in 2024. Now, this data comes from the government, which again signifies how significantly we have seen shift in discretionary consumption, right? How wallet share of discretionary items have increased, right? On the left hand side, you see urban consumption pattern, where in 2000 you are seeing almost 48% of money going towards food. Now you see almost a 10% decline, and less than 40% going towards food. So almost 60% going towards non-food items, right? Similarly, on the rural side also, drop is more significant, from 60% which was going toward food item in 2000. You are seeing that only 47% is going towards food items. So almost 53% of spending, even on the rural side, is towards uh, non-food items. And that is why we are trying to marry that since the wallet share of discretionary items are increasing, right, the tax relief is going to impact, let's say, if you look at 0 to 12 lakh people who are in that higher zone, right? Let's say mid to 12 lakh, and those people already have their basic needs satisfied, and that is where, when they spend incrementally, they are going to spend incrementally on the discretionary item, as the trends are showing. And in this sort of consumption theme, where this is a unique only fund which is focusing on discretionary items. It is going to focus on travel, on food delivery, wealth management, luxury goods, e-commerce, fintech, wealth management, etc. Because there's a lot of juice left, right? We are talking about that all these segments are very less penetrated. Two wheelers only 50%, cars only 10%, ACs only ACs only 8%, washing machine 15%, right? And you see that even on the real estate side, there is premiumization on the rise. You see premium phones getting more popular, air travel increasing significantly now above the at the largest highest level post COVID, right? Even when you look at passenger sales, you see that passenger sales are increasing, but the proportion of SUVs is has increased more, right? You see a reasonable rise in retail loan, in wedding apples market, and then if you look at apparel market and beauty and personal care market also, not only you're seeing a significant rise in online market within these segments. If you look at digital payment and wealth management right now, mutual fund industry as a whole itself is at 67 lakh crores, and we are seeing a significant rise in the UPI payments and fintechs, etc. Right. So I think most of the consumption story lies on the discretionary side. As per our expectation, discretionary is going to increase by 1.5 whereas we believe the staple is going to be somewhere 1x of the GDP growth. So our expectation is that growth is going to be more significant on the discretionary side than on the staple side, and that is where we believe that even on the active fund side we are more bullish on discretionary space than at the consumption space. Now this index, the consumption portfolio will look at 75 stocks, and as I mentioned that it will consider discretionary space, so it will not have any exposure to FMCG companies, it will not have exposure to B2C companies also, right? And now it seems very good, right, for this portfolio, because the sole focus is not, sorry, B2C, B2B companies. It will not have focus to B2B companies, so it will only focus on B2C discretionary segment. So you will have exposure towards two wheelers, four wheelers, uh, airlines, tour and travels, restaurant, digital entertainment, e-commerce, asset management companies, hotel and resorts, leisure products, pharmacy, retail, consumer electronics, consumer durables, etc. Right. So that is where this particular portfolio will focus on. It will not, if I say the other way around, it will not capture FMCG, it will not capture any B2B segments like auto ancillaries, because the focus is to target the emerging consumption pattern of Indian masses, right? So if you're looking at automobiles, that's roughly around 27% of the portfolio. You can see the names of the companies. Consumer services, which includes Trend, Zomato, Indian Hotel, Info Edge, Avenue Supermart, roughly around 23% of portfolio. Consumer durable, around 16% of portfolio, which consists of Titan, Dixon, Havels, Voltas, Blue Star, etc. And then comes reality also, which is around 10% of portfolio, DLF, Godrej, Macrotech, etc. Then almost 8 to 10% of portfolios into financial services, like asset management companies, and your broking companies like Angel One, ICICI Securities, etc. Then you have telecommunication, services, textile, right? One thing which you have done, I think, very correctly, and it always pays to have diversifications, that no company will have more than 5% weight in the portfolio, right? We are seeing a significant volatility in the market, and it's prudent to diversify your portfolio and have lesser weight concentration. That's why I'll see that within this 75 stock portfolio you have representation towards auto, consumer services, durables, reality, financial services, maybe only AMCs, and stockbrokers, telecom, textile, etc. But you don't. you have good sectoral representation and a fairly diversified portfolio in a very risk mitigated manner. So you're addressing consumer discretionary in a very risk mitigated manner. Now, the story of the new age consumption this has given around 20.8% returns compared to 18.3 of an overall consumption index which NSE has, or 15.8% of Nifty 50. This is post correction which has happened, and this is January 31st ending data. So this is post correction of almost 10% roughly, which we have seen in last 1 to 6 month, right? And this is, I think, again something which illustrates that how diversified sorts of this portfolio is in order to weather the storm. Because if this was more concentrated, the drawdown might have been significant, right? And again, if you look at calendar year wise data also, you'll see that in last 5 years or so it has done really well, especially against Nifty 50 or so. Now, if you compare it versus, let's say, an actively managed funds or India consumption index or ETFs, as I mentioned, this is the only product in the market which focuses only on discretionary space, and that to B2C discretionary space, right? Space which you and me are going to sorts of consume apart from food items, right? So portfolio I've already shown, and that is where you will see that there's a difference in terms of portfolio. In terms of new age consumption, which we have, will have higher allocation towards consumer services, auto components, whereas in case of typically other funds will have more focus towards FMCG. In this portfolio, we have roughly around 60% exposure towards large cap, 25% exposure towards mid cap, and around 15% exposure towards small cap segment. And this is again a difference which I like to highlight between a typical portfolio on the consumption side versus a new age consumption portfolio, which focuses, as I mentioned, on the discretionary space. So with that, I'll stop talking about this fund, just highlighting that India is the fifth largest economy, going to be a third largest economy, right? We have a median age of 29 years. We are seeing a significant move towards wallet share of non-food items increasing. We are talking about almost 60% of wallet share in urban, looking at discretionary non-food items, whereas almost 53% of rural wallet share looking at non-food items, with tax relief of almost 1 lakh crores, that we believe is going to have a more positive impact on the discretionary space than on the staple space. And if you believe so, I think this is one fund which you can uh, explore from an investment point of view. Having said that, this year we believe is going to be volatile, especially coming months. So I'll suggest that you do investments in a staggered manner, so that you are able to sorts of accumulate the units at an average price over a period of time. So that is about the new age consumption. Then we are going to talk about a very the second product is going to be Nifty 100 low volatility 30 ETF. Now we know how much smart beta factors have become popular. What is smart beta? Basically, in smart beta products, we use factors like momentum or low volatility or quality or equal weighing, etc., to pick stocks and to weigh stocks. So for example, in Nifty 50, or rather Nifty 100, because मैं Nifty 100 यूनिवर्स की बात कर रहा हूँ, you will only have Nifty 100 में 100 large cap stocks by size. In Nifty 100 low vol 30, we pick stocks based on less volatility. So जो stock की volatility less है, राइट, उन स्टॉक्स का सिलेक्शन होगा, एंड उनकी वेइंग भी उसके ऊपर होगी. So for example, if Nestle is the least volatile stocks in Nifty 100, right? So Nestle will be the highest weighted stock in the portfolio, not the HDFC Bank, right? So that is how this portfolio works. I'll again, for the sake of ताकि हम लोग थोड़ा वाइडर एक बार व्यू कर सके स्मार्ट बीटा के ऊपर. So I'll just again emphasize, right, that smart beta is a beautiful thing. Factor investing is very good, but you have to be aware about cyclicality, right? Momentum will do well when markets are doing well. Momentum does well in a trending market. अगर कोई market एक ट्रेंड दिखा रहा है, दैट ट्रेंड इज ऑफ 1 2 3 year, longer the better, you will see momentum doing really well, and that is why it did well post covid, right? 4 साल का almost beautiful run in momentum products, right? Even if you look at 2014-7, the first NDA government came, उसके बाद का जो 3 4 साल का रन था, momentum products did really well, right? But momentum products will always have a drawdown when markets are volatile and when trends are changing, right? And which is what is happening right now. So don't get disheartened. It's all about asset allocation. It's about creating your portfolio in a rightful manner, right? It's about, first of all, you have to stay invested in the momentum till you see at least 1 or 2 good years in terms of return, and hopefully momentum will do well at that point in time. But if you're expecting very good returns from momentum in, let's say, CY25, that is probably not going to happen. This is a good year of accumulation for momentum. Perhaps it is not going to be a good year of performance, and that is always true when you invest in a factor product. Same now comes low vol. Low vol typically, what is low vol? By name itself, it suggests that it is going to be a bit more sturdy product, right? Hopefully, it will fall less than the market, right? And इसीलिए low vol typically does better when markets are not doing well, right? It will underperform in a bull market, not do so well in the bull market. Underperform is the wrong word, but not do so well in the bull market. But typically, it becomes sturdy when markets are not doing well. So, अगर market has fallen by 20%, low vol will also fall, right? The idea is that hopefully low vol will fall less than 20%, perhaps let's say a 15%, 16% or so. And that is where typically low vol in the long term alpha generate karta hai, right? Because if you are falling less than the market, you are hopefully sorts of, आपका drawdown कम हो रहा है, and you are generating more returns in the long term, right? And but low vol में एक issue है. Issue is that it has a sectoral biasness. It will typically always be uh, tilted towards FMCGs, largish companies which are less volatile, healthcare, etc. Because intuitively, if you think which are the least volatile companies in India, yes, last 1 2 quarters, rather 1 3 4 months have been very unique when FMCG काफी correct with FMCG were very volatile. But if you remove this short period, you will say that most stable companies are going to be FMCG companies. आपके दिमाग में HUL, Nestle, Procter and Gamble, etc. आएगा. They'll think healthcare is something which is typically a stable theme, right? In these markets, healthcare is typically more stable, and then we'll say that there are largish companies which are going to be more stable and immune to volatility. Let's say a Reliance or an HDFC, etc. And that's why typically you'll see a low vol product targeting these segments. So while low vol का सिलेक्शन ही लेस वॉलिटिलिटी पे होता है, इट शुड हैव अ लेस वॉलिटिलिटी बट इट विल हैव सेक्टोरल बायसनेस, राइट? सो लेट्स से अगर मेरा 3 6 महीने के लिए व्यू या 1 साल के लिए व्यू बहुत नेगेटिव है हेल्थ केयर और कंजम्पशन के ऊपर, देन एक्चुअली लो वॉल में डू पुअरली देन द मार्केट, राइट? सो ये चीज़ें थोड़ी सी ध्यान में रखनी चाहिए दैट फैक्टर्स will behave in a cyclical manner, and some factors like low vol may have a sorts of a sectoral biasness, right? And that should also sorts of drive the reason why you should invest in a particular smart beta product like low vol, or not invest in a particular factor products like low vol, right? And other products like you can go through these presentation and look into what sort of behavior equal weighing will also have, or a quality will also have. So I think there are a lot of people who are raising hand. Please type your question in the chat box, and I'll take those questions together at the end. Right. So low vol 30 का सिलेक्शन कैसे होता है फॉर एवरीवन? वेरी सिंपल, राइट. निफ्टी 100 सेगमेंट को लेते हैं, विच इज योर लार्ज कैप सेगमेंट. सो गुड थिंग इज दैट आपका इनिशियल स्टार्टिंग सेगमेंट ही लार्ज कैप है, राइट. अगर आपको इक्विटी में सबसे पहले किसी लेस वॉलेटाइल सेगमेंट को देखना है, यू शुड लुक एट लार्ज कैप. विद इन लार्ज कैप typically companies which are having less volatility. So how do they calculate less volatility? They look at standard deviation of daily price return. पिछले एक साल में प्राइस मूवमेंट कैसा हुआ है, उसका स्टैंडर्ड डेविएशन क्या था, एंड द कंपनीज which have lower standard deviation, those 30 companies are selected, एंड उनका वेइंग भी उसके ऊपर होता है, राइट. उनका फॉर एग्जाम्पल जैसे मैं बताया इससे पहले कि इफ नेस्ले इज द लोएस्ट volatility, the Nestle will get the highest weight in the portfolio, right? And there's a overall cap of 5%, right? And just look at the sectoral exposure and why we sorts of are talking about low vol. So low vol, it's a spotlight of the month because of two reasons. One, it's a low vol because hopefully this in this volatile market it will have a lower drawdown in the long run, right, till and it will be more sturdy, and this is within large cap space. And from a sectoral allocation point of view, it has higher weightage towards FMCG and healthcare. Just compare it with Nifty 50 or a Nifty 100, right? Nifty 50, Nifty 100, 34% फाइनेंशियल सर्विसेज है, यहाँ पे सिर्फ 17% है. वहाँ पे सिर्फ 8% FMCG है, यहाँ पे ऑलमोस्ट 19% FMCG है. वहाँ पे सिर्फ 3-4% हेल्थ केयर है, यहाँ पे 16-17% हेल्थ केयर है, राइट. इवन ऑन द कंज्यूमर ड्यूरेबल साइड विल सी दैट निफ्टी 50 में 2-2.25% कंज्यूमर ड्यूरेबल है, यहाँ पे 7-7.5% कंज्यूमर ड्यूरेबल है. सो योर allocation is completely different. So we are talking about this product because one, it's a low vol product, makes a lot of sense in this volatile market, and second, since we are going bullish on the consumption side, this is sorts of bias towards consumption and towards healthcare segment. From a holding point of view, like I mentioned, the highest allocation is towards Nestle, Hindustan Unilever, Maruti Suzuki, Finserv, Britannia, Asian Paint, ITC, Sun Pharma, Titan, Reliance, Tata Consultancy, ICICI, Kotak, and if you go further, then HDFC Bank, Dabur India, Cipla, Torrent Pharma, Bosch, etc. So see, you are seeing two trends. One, you have a lot of consumer names which are typically more stable. You have a lot of healthcare names also, which was typically stable. And then the beauty is that you typically do not have your metals, oil and gas so much, right? Under representation. अगर मैं पीछे जाऊं तो oil and gas निफ्टी में 10% है, यहाँ पे 3% है, right? So you have lower allocation towards oil and gas, etc. And then again, one beautiful thing is that you have biasness towards typically largish companies, right? So you'll have, because they tend to be more stable, right? So you have allocation towards Maruti Suzuki, for example. Within banks, you have allocation towards HDFC Bank, ICICI Bank, Kotak Mahindra Bank, for example. You don't have exposure towards smaller banks which can be more volatile. So that is how the portfolio is constructed, and if you look at historical performance over the long run, has done really well. Low vol, if you are talking about performance in last 10 years, it has outperformed Nifty by 2%, right? Which can make you happy or may not make you happy, because you might be looking for more alpha, but 2% is not bad if you look at volatility. It has given 2% alpha, but it is less volatile by almost 2.5% in last 10 years. Again, if you look at last 5 years, 18.57% return दिया है compared to 16.4% of Nifty 50. This is again Jan ending data. But अगर आप वॉलेटिलिटी देखें, इसने 15.7% वॉलेटाइल है कंपेयर टू 19% ऑफ निफ्टी 50. तो इट इज ऑलमोस्ट 3.3% less volatile, and it has given almost 2.3% higher return. So its return to risk performance is very good, right? More returns in the long run with lesser drawdown. Having said that, now comes exception scenarios, because right now markets are behaving in a very exceptional manner. There are certain movements which we have not seen uh, in quite some time, right? We are seeing a very sharp drawdown if you're looking at stock level data, right? Index level be we are seeing significant corrections, but stock level is more surprising, right? So यहाँ पे भी if you look in last 6 months, Nifty is down by 4.4%, low vol is down by 4.3%. प्लीज अंडरस्टैंड दैट दिस इज व्हेन एफएमसीजी स्टॉक्स में भारी करेक्शन आया था. उसके बाद भी आई विल से दैट लो वॉल उतना नहीं गिरा है. This is what is sturdiness is all about. In fact, the parent universe Nifty 100 is down by 6.3% in last 6 months. Low wall is only down by 4.3%. So again, this talks about sturdiness of low volatility, right? And if I remember correctly, in December or so, uh, there was sharp correction in lot of sorry, in November and December, there were sharp corrections in FMCG stocks. Even considering that, you are seeing low volatility, roughly around Nifty 50 level, and doing fairly better than Nifty 100, which is the large cap segment. The below drawdown also sorts of illustrates that, right? Because if you look कैलेंडर ईयर वाइज, तो हमने यहाँ पे क्या किया है कि निफ्टी 100 कितना गिरा था और निफ्टी वॉलेटिलिटी 30 हर कैलेंडर वाइज कितना गिरा है. सो आई जस्ट talk maybe from 2000 let me take a 2018 onwards. So 100 ka drawdown, maximum drawdown around 15%. This was down only by 12.5%. In 19, Nifty 100 was down by 10.5%. This was only down by 10.9%. In 2020, the Nifty 100 was down by 38%. This was only down by 30.6%. So on and so forth. Having said that, there are certain exceptions, like in 2024, jab by the end aate aate there was a higher drawdown because of correction in FMCG and consumption stocks. But जहाँ पे मैं data देख रहा हूँ for last 6 months, so this seems to have mellowed down, and low vol has done fairly better than Nifty 100. So that is what low wall is all about. It's about sorts of falling less than the market, showing more sturdiness. Having said that, there are exceptions. So there's nothing written in stones. But whatever we are talking about is something which happens more often than not. Even from a performance point of view, you can look at the data. Even in 2020, 2020. 2022, etc., seems to have done reasonably well. So Nifty 100 low vol 30 index is something which we are suggesting if you are looking for a more sturdy portfolio with better drawdown protection. This portfolio is created based on metrics which seeks to target these behavior ki lesser drawdown ho, lesser volatility ho, etc. Plus the fact that we are liking consumption so much, and this product is skewed towards consumption, like I've shown you in these slides. This is something which I think makes a lot of sense right now, since market is volatile, etc. So do look at both the products which I have talked about, which is a new age consumption, the India's only discretionary focused consumer discretionary focused fund, and Nifty 100 low vol 30 ETF if you are looking for a more investment in a product which is expected to be uh, sturdy, expected to have lower drawdowns, which has higher tilt towards consumption, healthcare, etc., and low tilt towards financial services, oil and gas, etc. So with that, I think that was all from my side. What I'll do is I think I'll just see if there are any questions on these two funds. Uh, So yeah, I think let's take difficult question first, right? Because it is important to address concerns of investors, right? So Sharad Gupta is asking that at the time of NF of low wall and momentum, our marketing language was different. Now we are seeing saying that difficult that in this market both may perform badly. So why we invest in these products? So Sharad, that was never the case. We have always talked about that alpha and momentum based products is always going to be a high risk high reward product. So in bull market they are expected to do well, in bad market they are expected to fall more, and that is how any either on the passive side or on the active side there are a lot of mutual funds which follow momentum investing. I'll not name any AMC, but they have also seen significant drawdowns, and that is fine, because I think momentum and alpha investing जब आप कर रहे हैं तो you should be ready to face risk and drawdowns. अगर आपने invest करके रखा हुआ है तो what I'll suggest is use this period for accumulation. I don't see good returns happening in CY25, but what I'm trying to say कि अगर आप corrections पे उसको accumulate करते हो तो when markets start recovering, let's say, and it's hard to tell, maybe by the second half of this year or next year, or beyond that, whenever that run of 1 to good year happen, you'll see typically momentum doing well, right? So that is how you should approach momentum. You should approach it in a manner that आपको bull run capture करना है. Either you are lucky, you can capture bull run in your very near investment horizon, or you can capture wait out and seek to capture the bull run. It's always a high risk high reward product. With low wall, what I was mentioning is low wall की utility क्या होती है कि it is a more sturdy. It will never give you a significant outperformance. The idea is that एक दो long run में 1-2% का आउट परफॉर्मेंस देगा, बट टिपिकली वॉलिटिलिटी इसकी निफ्टी 50 निफ्टी 100 से भी बेटर होगी. In terms of it will be less volatile, which I showed you, right? So for example, if we are expecting market to by drop by 10 15, let's say 15%, if you're expecting in nifty 50 इस साल 15% का drawdown रहेगा, right? Then let's say typically, and again typically, you will see low volatility having a lesser drawdown of around 13% or a 12%. So it will fall less by 3-4%. And that is where in the long run low wall आउट परफॉर्म करता है, बिकॉज जब जब मार्केट गिर रहा है, अगर लो वॉल कम गिर रहा है, that is where that alpha generation happens, right? Because you're falling less. So why we are suggesting it right now? We are suggesting that for two reasons. If you invest right now in low volatility, typically expectation will be your capital loss will be lower, right? And that is on an M2M basis. I'm not saying that you redeem it with a capital loss. On an M2M mark to mark basis, your capital loss will be lower. But in the long run, as we expect consumption companies to do well, healthcare to do well, hopefully post this volatility, you will see a reasonable returns on your portfolio, hopefully. So that is how you should approach low vol and alpha investing. I'll just look at a couple of more questions. Yeah, so there is one question by consumption ETF is good for long term. Yeah, so there's this question from Suhas Joshi who's asking consumption ETF is good from long term horizon. Yeah, I think we believe that consumption ETF is good. I'll suggest to do staggered investment and not lump sum currently. So I don't think that this is the bottom of the market. So, and obviously no one can rightly predict the bottom of the market. So what I'll do is I'll do staggered investment in our new age consumption ETF for coming period rather than doing a lump sum investment. Okay, so there are a lot of questions from Hardik Chauhan. So Hardik, yes, I'll take. So while this is not related to the topic we are talking about, what is the future of FANG ETF and S&P top 50 ETF in next 1 year? See, I believe that both of FANG especially is trading at a significant premium. So I don't see it doing as well as it has done in last 2 3 years. I expect it to be bit volatile, right? Same with top 50. US markets are right now trading at an expensive zone, so I don't expect it to do really well. But what I'll say is that if you have invested in FANG and top 50, see, the problem is that if you're already an investor, right now SEBI has not uh, what do you call it, increase the AUM threshold and not allowed us to open this these two funds for accepting fresh money. So if you're trading tactically, fine. As I mentioned that I don't believe that there's significant upside in Mafang right now and top 50 because of valuations they are trading in. But I still believe that US market is going to be because these companies are sorts of top players doing really well. I believe that there's going to be, while they may not give a significantly positive returns, it will be something which may give sorts of uh, it may remain stable as such, because right now US is something where we are seeing that people are pulling money out of EM markets and looking at US in general. But if you are looking from a long term point of view, I'll suggest that don't take out money, keep invested in these US product, because I don't know personally when SEBI and RBI will allow fresh investments to happen. So re-entry into these products may be difficult for you. So if you are looking for cash out, you may look at doing that. I hope you have generated good returns on your investment. But if you are looking from a long term point of view, I'll suggest that you stay invested, because right now there is no re-entry point in these products, and these both ETFs are trading at significant premium. So re-entering and buying at significant premium doesn't make sense. So yeah, so I think there's one question on from Nandish. I think, and that's a yeah. I'll take the second last question. So there's a difference between low vol and alpha low vol. So Nandish, difference in low vol and alpha low vol is that low vol product is portfolio is created, stocks are selected, and stock are weighted based on low volatility फैक्टर ओनली. सो जिस भी स्टॉक का लोअर स्टैंडर्ड डिविएशन होगा, बेटर लोअर वॉलिटिटी होगी, उनका सिलेक्शन होता है, उनकी वेइंग भी उस पर होती है. इन केस ऑफ अल्फा लो वॉल बोथ आर कंसिडर्ड. सो हर स्टॉक का अल्फा स्कोर भी कंप्यूट होता है कि किसकी अच्छी आउट परफॉर्मेंस है, किसका अच्छा मोमेंटम है. उनका लो वॉल स्कोर भी कंप्यूट होता है, एंड देन उनका एवरेज स्कोर निकाला जाता है. एंड जिनके एवरेज बेटर होता है उनका अल्फा लो वॉल में सिलेक्शन होता है. सो ऐसा पॉसिबल है कि नेस्ले विच इज बेस्ट लो वॉलेटाइल कंपनी, अगर उसका अल्फा उसका मोमेंटम बहुत ही खराब हुआ, तो इट मे नॉट गेट सिलेक्टेड इन अल्फा लो वॉल पोर्टफोलियो, बिकॉज उसका एवरेज पुअर हो जाएगा. बट इन लो वॉल पोर्टफोलियो इट विल बी सिलेक्टेड. सो दैट इज हाउ selection works in a low vol product which is only focusing on low vol portfolio, and alpha low vol product जहाँ पे averaging काम करती है. You calculate alpha score, you calculate low vol score and select stock based on both. Uh, Yeah, so I'll just take last question, which is that we are not able to start SIP in Mirae Asset Global X AI and Tech ETF fund of fund. Uh, Apologies for that. The point which I just made for FANG and Top 50 is that SEBI and RBI limits are not raised for offshore investments, which is $7 billion for direct investments and $1 billion if you're investing in offshore foreign listed ETF. जिसकी वजह से these schemes are closed for fresh investment. So your Mirae Asset Global X AI and Tech ETF, you will not be able to start SIP and you will not be able to do fresh investments. As soon as regulatory limits are revised for the industry, we will open these funds for investment and we will keep you informed on both. Yeah, so I think these were all the questions. That's it from me. Thank you for joining this webinar. If you have any questions, please reach us out through social media channels or through your RM. We'll be happy to answer as many questions as possible. And then again, do connect with us next month, which when we'll be again talking about two or three ETFs of the month depending on the market scenarios and where will we see sense in investing at that point in time. So thank you for joining. Please take care. Goodbye.